Your portfolio is probably bleeding right now. Is this the end of the bull market? Today, we're going to cut through the noise. I'll show you why this massive fear in the market might be exactly what we need, and I'll give you my specific price levels for stocks I'm looking to buy, like Oracle and Meta. But there's a dark cloud on the horizon. Michael Burry, the big short investor, is warning that big tech companies might be lying about their AI profits. We need to talk about this. Right now, the fear and greed index for both Bitcoin and stocks is flashing extreme fear. Most people see this and panic. They think it's the top of the market, but history shows the opposite. Extreme fear is almost always a sign that we are closer to a market bottom, not a top. It's a contrarian indicator. When everyone is selling, the biggest opportunities often appear. Look at the equally weighted S&P 500. It's not crashing, it's moving sideways. This looks like consolidation, a period where the market catches its breath before the next leg up. The same thing is happening with Nvidia. Everyone is panicking about its drop, but it looks more like a healthy consolidation than a definitive top. If this kind of analysis helps you stay calm when everyone else is panicking, do me a favor and hit that subscribe button. It's the best way to support the channel and stay informed. So why is everyone so scared? 3 main reasons. First, the Federal Reserve. Markets were betting heavily on an interest rate cut in December. Now, Fed officials are hinting that they might pause. No rate cuts mean the easy money party gets postponed, and that's causing pain for investors. Second, the crypto market has entered a confirmed bearish phase. Bitcoin has collapsed from its highs. When Bitcoin falls hard, it drags down the entire market sentiment with it. And third, the most worrying factor, potential accounting tricks in big tech. Michael Burry is pointing out that companies like Meta and Alphabet might be inflating their profits by nearly $3 billion. They're doing this by extending the useful life of their servers and IT equipment on paper. This makes their massive spending on AI look more profitable than it actually is. This is a huge red flag we need to watch. So we have fear, a hesitant Fed, and serious questions about earnings. It's a point of inflection for every investor. Do you sell your tech stocks, protect your assets, or is this the time to look for bargains? Later, I'll tell you about my favorite growth stock right now, but first, let's talk about where Bitcoin is headed. Despite the short-term bearish trend, the extreme fear suggests a floor is near. We're seeing respected, historically accurate crypto wallets starting to buy assets like Ethereum. This doesn't mean the bottom is in today, but it's a sign that smart money is getting interested. Now for stocks. Here's my plan. Remember, always invest based on your own risk tolerance and financial plan. Let's start with Oracle. It's transforming into an AI company, but its new cloud business has lower profit margins than its old software business. This makes it a safer, slower growth bet. It's a company that will be around for a long time. I'm a fan of dollar cost averaging into Oracle, especially if it falls below $200 per share. Dollar cost averaging just means buying a fixed amount regularly over time. For investors with a higher risk tolerance, we have companies like CoreWeave or Rubrik. CoreWeave is a pure play on renting data centers for AI. It's a high-risk, high-reward bet. A pullback to around $75 could be an interesting entry point for a growth-focused portfolio. Rubrik is one of my top buys for growth investors. It's a cybersecurity company with a fantastic business model. Yes, its valuation is high, but I believe it's justified. I am personally dollar cost averaging into Rubrik at $75 or less. What about the giants? I still love Meta. Despite Burry's warnings, its fundamentals are strong, it's growing, and it pays a dividend. I am comfortable buying it in the 500s. I recommend a dollar cost average strategy on any price below 600. And finally, MercadoLibre. Think of it as the Amazon of Latin America. It's expensive, but its growth in e-commerce and fintech is explosive. It's a great long-term holding. I'm a buyer using dollar cost averaging below 2,000. So here's the bottom line. The market is facing real headwinds, but the widespread fear is creating opportunities in high-quality companies. Don't let emotions drive your decisions. Focus 99% on the fundamentals of the business and 1% on the charts. Have a plan and execute it. Don't just panic sell. Know what you own and why you own it. If you found this breakdown useful, subscribe to the channel so you don't miss the next update. And now I want to hear from you. Are you selling, holding, or buying this dip? Let me know in the comments below.